You've received a letter from the Delaware Secretary of State, an invitation to participate in the state's Unclaimed Property Voluntary Disclosure Agreement program. So what does that mean, and what should you do next? In this video, we'll walk you through what this program involves, why responding is critical, and the key steps your company should take right now to make informed strategic decisions. Hi everyone, my name is Matt Bauer, Managing Principal at Simon Scott. If your company received an invitation from the Delaware Secretary of State to participate in its Unclaimed Property Voluntary Disclosure Program, it's a must that you take action within the first 90 days. Failure to do so will result in your company being referred to the Department of Finance for an unclaimed property audit. You may be asking yourself, what are some of the differences between a VDA and an audit? So both the VDA and the audit would have the same look-back period. Penalties and interest would differ. So under the VDA program, there would not be any interest or penalties. Under an unclaimed property audit, there would be a 20% minimum, or if you elect to participate in the expedited examination program, there would be a 1% interest assessed. The voided check aging criteria differs as well. In the VDA program, they use a 90-day aging criteria, where under audit, they typically look at voids over 30 days. Under the VDA, the company and the VDA administrator would work together, kind of controlling the process. And under an audit, just as you would be under any normal audit, the auditor is typically in control of that process. The regulations that drive the VDA program are the Department of State VDA program regulations, and the regulations that drive the audit program were issued by the Department of Finance, and they also published an examination manual. The methodology of the VDA is more facts and circumstances approach, where under audit, the audit process is fairly defined with standard document requests and procedures. The VDA process would still require a company to do a thorough review of its books and records. The company would be responsible for reviewing tax returns to determine entity scope, general ledgers to determine property type scope, as well as source documentation such as bank records, accounts receivable aging reports, or other general ledger activity to identify populations to ultimately test for compliance with Delaware's unclaimed property regulations. Before determining next steps, each company should consider whether or not it has an understanding of unclaimed property and all of its compliance requirements, whether or not there's been historical compliance with unclaimed property, your company's Delaware footprint, including companies that are incorporated in Delaware, as well as companies that might have significant sales, vendor, or employee base within the state. And lastly, but most importantly, is your record retention to determine if you have records that would cover the entire look-back period or if there's the potential for estimation. 90 days may seem like a long time to respond to the VDA invitation. However, there's a lot a company must consider. At Simon Scott, we help our clients through that decision-making process and either assist them through the VDA process or prepare them for an unclaimed property audit. Should you have any questions, please reach out via the contact info displayed in this video.